Hi, welcome to this webinar. It's so good to be here, and I'm looking forward to how you find this. So let's get started. I am here and I'm going to be talking briefly about the basics of budgeting. I'm particularly addressing event planners, I think. This is, I've tried to make this as relevant and useful for this nature of business owners or persons that are involved in this project. Let me start by introducing myself. I'm Tinu. Here are some of the fun things and things that I like to do and engage with. So I would say for anybody trying to put some, just to know where I've been, here are just a few places I've had to gather a few studies. Okay, so if you're here, I think I would like to set the stage with this. I think it's important to kind of have a view of, the way things are done and why things are done the way they are. And so I've put before you the scenario, which I'm pretty sure you're aware of, but just to help us appreciate, some of these things. So here you have before you different professions, right? And notice how the doctor, physician, has several years of studies of practice to gain a holistic knowledge of how the human body works and functions. Same with the accountants, same with other professions. They have had several years of studies to gain, the knowledge that's relevant for the financial health of a company, how the company works, or other professions, what they do there. They do not know everything, but they know where to find what and as at when, especially fit for purpose. And you can also tell that they have snippets of bits of information here and there. So if you go online and you say, oh, I have a headache, you see things pop up to guide you. If you say, oh, I want to know about budget, things will pop up and will guide you there. And if you, another profession, oh, I want to know about engineering, things will pop up and you'll guide you there. But these professions, they would research to know what works best for each individual. If you're going to meet one of them, an accountant, they would work with you as a company, as an individual, to know what's research, do some research and see what works best for you. So it is pointless to use that piece of information that you have readily available out there without their guide. It's important that the experiences, the exposures in your studies mix for their relevance. So let's keep that in mind as we go on. What's in store for you today? So I would say relevant learning is good, right? So if you're here, you've taken a good step, a good first step, and you will be learning about budget, understanding key lines, and how to read a budget. Okay? And here are the learning objectives. I've also included a few lines to show that if you need more than what we have here, which is a summary, there's a course we're proposing which would enable you to have a more disciplined approach to developing budgets and what's more, if you want to have more insights. And so, I also usually try to, well, it's something I've noticed, people cannot seem to differentiate what these two functions as finance people, what they do or how they differ. So they are interdependent functions within the finance role, as it were. And the budget and budgeting process fits into this equation how. So the financial accountant or accounts, okay, the accountant is the person that prepares the accounts. For the accounts, what it shows in there is information for, that shows about your business or what a company does, and presents it, using a set guidelines, general accounting practices if you're in the United Kingdom, like now, and those steps will guide the preparation of those accounts in a certain way, and then they get reported we call them returns as well. So you either post it to HMRC or you put it for tax purposes, and then you begin to do what you need to do with those ones. For management accountant, so they differ in the purpose for use and how they're prepared, right? but you use the same set of information from them, but you use them in different ways. So for management accounts, you prepare them for decision making within the organization, for planning within the organization, so for guiding you in your organization. So its use is slightly different, and that's where budgeting sits within, because among other things the management account does, budgeting is one of the other role or one of the other reports that could come up as a result of assessing the health and financial state of an organization. And so, with that being said, I would then like to also note that everything that goes on within the organization lies within each of all these, you call it reports, statements, financial statements. So everything that goes on within an organization sits inside one of these spaces. So every function, everything that goes on within an organization sits within each of either any of these key statements. And so it's important to note that, here that there is an actual financial statement which states what we have done and what transpired within a period, different from a budgeted financial statement where it shows we are aiming for this and all of these activities and all these lines and all these reports. This is what we aim to do, or this is what we project to do. This is what we forecast to do within a certain period of time. So just keep in mind that we're talking about the part that is aiming for, not the actual results. So we are all about the planning part, the budgeting part, the forecasting part, the projections. So just to keep that in mind. And before you start the budgeting process, there's usually, the goal setting that is the base of the entire process. So the typical strategy process or planning process, you would start from your vision, your core values, your goals, and then from there those are translated into formulations of strategies, and then mapped to your business goals, and then they will begin to design key performance indicators from the metrics. Should it be to perhaps, if you were to make budgets for this for a certain for employees' performances or a certain operation, whatever it is, metrics will come out of that, and then you need to put figures and values and to them, and that's where the budgeting process begins. Apparently, that's where the headache begins, as I must say. And so, with that backdrop, I should also put forward. Put forward that there are different methods and approaches to preparing a budget, for instance. And, you could have the incremental, activity-based, value propositions, zero-based. They each have their relevance as of when needed. And, if I were to delve into, the nitty-gritty of when you use this, how you use this, we might not end, and that changes the focus of our meeting here or webinar. And then note the fact that if perhaps there was an activity-based budget approach that was taken, notice that it would definitely be top bottom. So that also shows it also shows the level of involvement of the budgeting process. Sometimes it's imposed, sometimes it's negotiated, sometimes it's participative, and that's those are some of the considerations among a whole load of other considerations that go on into the budgeting process. And then, of course, at each of those levels, decisions are taken as an organization. Mind you, it's also important to also state there that your financial statement, or if you're an organization that have been running before, your financial statement translates into which approach you're going to end up using at the end of the day. What then is a budget? I've split this into the fact that I'm going to use the word budgeting as well as budget, but we can tell that a budget is just a deliberate and intentional process of resource allocation. But then the budget itself is actually the amount that you plan for a certain resource or particular operation, whatever it might be, that you set aside for that. And with that, I can then just have a chat around the fact that there's, every event type or event plan goes through the same rigor or the same process, like similar processes, I would say. There's usually the headache. It's a daunting task to plan for an event. The different factors that go into budgeting for an event, for instance. You have considerations of, say, the company's size, the goal of the event, the scope of the event, the size of the event, the location of the event. So things to remember are that, when you're planning or you're budgeting, you may not immediately have it broken down completely, but you definitely need numbers to make sense of the goals. And then the amount a company is willing to spend on a certain event sort of affects your size, the location, the venue, and much more. So if your organization or you as an individual haven't a clue of what you need to spend, then it's not a good place to be. And so the overall budget actually shows what the company can afford, and from there you try to calculate other things like the returns and what's more. But then how then do I go from not knowing to knowing what to do? So unless you can measure a goal, you won't be able to determine the impact of your event, right, or your business, and or how many maybe leads to generate, or how cost effective, or how beneficial is this. And so that kind of sets the tone for the importance of actually the budgeting process. It's known to be the most challenging part of planning and executing an event, and I quite understand that, because I've been there. I've had to plan events before, and I've had to prepare budgets severally, not just for events, but for companies. And so since that part of the strategy is ultimately tied with the financial goals of the organization, it's important to produce a detailed and well thought out plan that helps you kind of track your costs, and demonstrate your returns are actually, and your business is actually viable. And that kind of puts the purpose in check. Now, notice how I said earlier that there were 4 types of budgeting models. It's good to clarify that there are actually more than 4, and there's several other ways of doing budgeting, or preparing a budget, or considerations, or models, or structures, or frameworks to be used. There's a whole lot of things to do, and more are being developed even as we speak. Better ways of doing things are being developed even as we speak, and better models are being designed. But what's just key are that those 4 are the most common types, and that's just to put some clarity to that. And here's why that needs some clarity, because the whatever you choose to use, whatever tool or structure or model you choose to use, actually depends on a lot of factors, because of the range of event types and complexity. It could range from being as simple or complex, or they could be large events, or it could be small events, or it could be the structure of the business types. And there are businesses that are unique and uniquely structured, because everybody's trying to create a niche or try to fit into some sector, and seeing how to play within the market sphere. And so all of these things sort of influence our choice or decisions of what model to use. And so that clarity needed to be made there. And that the budget is not created in vacuum. And now is a good time to sort of also do some form of clarification that the budget of your company is different from the budget of one of your events or projects your company is undertaking, for instance. So you have the budget for the several projects that an event company could be undertaking, right? Where that will be sat in the overall bigger picture of the company would be some place like maybe trade receivables and and other receivables or trade and other payables. And so, and that's, among other places within the either income statement as well as the balance sheet and other places. So we need to be able to put some context into what part of the budget are we referring to. And so that, with that backdrop, I decided to help us, which moves us to our next stage, which is understanding the lines. And you can't understand the lines without sort of understanding its useful purpose, right? And that's what we engage with. That's why it's usually best we handle budgeting or financial matters on a case-by-case basis, because the businesses are very unique to themselves. And so I've tried to explain this using 3 scenarios as objective as possible, where you have Mila, who is an event who organizes events mostly for family and friends. I like you to see Mila as a go-to person. That person that everybody just very resourceful. She's got everything covered. She knows where to get waters up when, and she can pull anything off in a minute or in a second. She's that kind of person. And I like to see you to see Adrian as someone who works for a large event company, and a large event company, meaning they handle internal, external events. They have multiple channels of revenue in terms of how the kind of projects they carry out, and they're online, they're offline, they're in different sectors, in different segments. So they are that busy place. Buzz. And so Adrian is a project manager in such an organization, but he's responsible for several other projects, event projects. So he's managing multiple event projects simultaneously. So imagine the complexity and nature of activities that go on with Adrian. And then you have Kirsty, who happens to be a medium-sized business owner. So I'd like you to see her as an event planner that also manages, also runs her business in such a way that she could just stick to a niche and say, okay, I only do external events, and in certain sector, maybe events that are conference style, or events that are she has a niche, so she's carved her business in that way. She's just only catering to a certain sector or segment of people, and that, or segment of needs, better still. And now imagine Kirsty having, she would have probably weddings to plan. Maybe that's one of her niches, with weddings, or you just can have a fair idea of the kind of thing she'll be doing with her business. So she's a medium size. She's run for 5 years. So that's how I wanted to see Kirsty. Sorry about that. And then one thing is to note that all 3 scenarios, as with other scenarios that could pop up, they have similar budget elements. How do I mean? All we're saying is, for each of those scenarios, they are going to have money coming in. However, it could be from fundraising, it could be from family contributions, it could be from generating revenues from, from some events, like maybe when people buy things at the event, whatever it is, some money comes in as a result of that event. And so that's what we call budgeted revenue or income, right? I've tried to keep it as simple. I'm not going to use our financial jargons. I've tried, so I'm even making use of words that may not be financially appropriate, but because it's simpler to understand by people that are not financial people or financial advisors. So that's why I've used those words, and I use them that way because of the way people have kind of gotten used to hearing it in a certain way. So I'm not about book definition or textbook definitions right now, just to keep things simple and digestible. And same thing with the expenses and expenditure and spending. It's just how much you're spending that goes out regarding this business or this thing I'm doing, this event that I'm planning. Pretty much anything that you're doing, spending regarding it is what for. They all have this. And so I've had to kind of use Excel to show like a full view, side by side, activities for each of the scenarios under each of those key lines, which is incomes and expenses or expenditures. just to have a better appreciation of value of what is actually going on, and in helping to read those lines. So notice how I have tried to represent this, showing the three scenarios at the top of the screen and trying to keep it as simplistic as possible. So I'm going to really try to avoid using any technical languages or things that could be, complexly, explained or difficult to understand. And so here we have Mila. Notice I'm looking at their income, the budgeted income. So this is, remember, these are all estimates. They are not actual things that took place or are going to have taken place. So these are things that we are trying to put a plan or put some figures to what our plans have been so far. So here we have Mila, who maybe a scenario could be that she's planning a barbecue that's coming up soon. So what might she have as incoming, right? For anyone thinking, what would I put in this place? Okay, for her, incoming will be things like, notice how she labeled it or described it as needed cash. It could be anything. So you could make it your own, digestible word for if you were in that scenario or Mila situation. You'll probably be, oh yeah, transfers from, or contributions or something. But notice she's put it as cash needed, and then she's put it as cash from family, cash from contributions, and transfer from friends, and she's estimated the number of guests going to be there and how much each are going to be contributing towards the barbecue that's going on. Perhaps maybe that's some type of barbecue that they're not, they're having, I don't know, for whatever reasons, you just never know, and just something like that crops up. Okay, and then you have Adrian. Notice that's her income, right? Incoming money. That's the money that's coming in for her so far for that. If she were to have other sources of how she plans to get the money, she will probably create another line. So that word line is just pretty much describing what the purpose or where that money is going to come from. So notice that Adrian is, remember, he's in a large company that runs multiple businesses or multiple projects. And he is a project manager that is running several events simultaneously. And one of such events is a large conference, which will be coordinating or planning, right? And how he has decided to spread out his incomings towards that large conference. Things like where he plans to get some incoming is from ads in the program. Notice how he has estimated that he plans to have 10 people, 10 people placing an ad. So sometimes these event companies could say, you know what, for this conference, people tend to advertise their businesses in the brochure, in the flyer, or in the magazine or papers, or whatever it is that comes as a result of that event. So they have decided to cost this, put a price to it per cover page, half page, quarter page, and see how much estimates that comes to. So in other words, what the estimates here showing here total to, remember, this year one, and there's year two, and there's year three, right? For year one, this is what they actually have estimated. It's column M for Monday. And so they've said, okay, for 2,000 per cover page, full cover page, for 10 people that subscribe, they're going to end up expecting to get £20,000 from that sort of situation. So that's talking about this one. And so on and so on and so on. That's for ads in programs. That's one of the lines they plan to get revenue from. Another one that they have put plans for are things like, let's show it's misbehaving. Yeah, admissions. So they're thinking, you know what, people are going to buy tickets to this conference. So let's see how that goes. Remember, column M is what we're dealing with, which are the estimates for this current year or the year one or the first year of operation. And then see how many admissions, meaning people that are likely to buy the tickets, and how much each ticket costs for adults, for children, and they put the different categories there. £5 for adults, £2 for children, and £1 for whatever it is that you decide to cost your tickets in there. And those are going to generate £100,000 for, and so on and so forth. So that's another line, admissions. Now, he has also said, okay, you know what, we're likely to get incoming from, the vendors and people that exhibit at the event. So they might want to have booths, large size booths, medium size booths, small booths, and that chart as well. So per booth is £100, and then they're estimating 100, people that turn up to the event, or businesses that turn up to the event, are likely to subscribe to this and pay for that. And then they also, and that of course comes up with the values, which is the estimated total, which is column M. Remember, that's what we're focusing on, just to guide reading or understanding the lines. And here's another way they intend to have some income or some revenue or some money to come in, also from sales of items. So at such a conference, they are likely to have things like corporate gifts or things like that, or maybe there's a product that's going to be sold or some product launch. You just never know. And so, they've costed each item per, certain amounts, and they're estimating number of people that are likely to buy them. And they've also estimated based on that. And they have a total estimated income, see the value of 538,000. And that's what they plan, because for this particular large conference. Okay. Now, here we have Kirsty, who has a totally different scenario. Let's say she's planning, remember Kirsty, we said, could be an event planner that's created a niche, that she only does internal events, and external events, and one of such could be wedding plans or anything else. So for such a company as Kirsty's, she could have similar lines to Adrian's large conference, because it's a kind of, maybe this external event is similar to the large conference, and so the lines could be similar, but notice the quantity or the size of her estimates because of the nature of her business, or the size of her business. So she's not as big as Adrian's company, who he works for, but her business, does probably similar operations, but on a smaller scale. And so you could see, so Kirsty's incoming could look totally different from Adrian's, but in this scenario, it could look exactly the same, but just in a smaller size, smaller scale. So just something to note, that again is so dependent on the nature of business, or the size of the business, among ones that I shared earlier. And so here are the lines, and notice how it could also be totally different, but I've used this scenario to show that it's slightly similar, but just a different value, smaller scale. That's about it with the income. And then you have the expenses. So for the expenses, for Mila, who is quite informal in nature, she's very unlikely to have many lines that are unnecessary, because all she's trying to do is, I need a venue, I need refreshment, people are going to eat and drink. You could decorate, maybe it's an outdoor, of course it's barbecue, so they'll probably do some decorations here and there. They may have a program, they might not have a program. It might not, might just not be necessary to spend anything on, creating, maybe flyers or those kind of things, very unlikely for Mila. And so that's why you see the lines written decorations. You see that? And then you have venue and you have refreshment. So those are the kind of things she's likely to have as lines in her expenses. But remember, they are all spending towards the event. And for Adrian, which is more complex. Now, Adrian, is something to note here, that Adrian's view that I have here is just one of the several possible other views that he could have. So this is just showing Adrian's scenario could have a gazillion ways of showing all of his expenses. So, but notice every expense, everything that you spend towards the event has a way of. So there's a way that we operate, that you just have to have a way of linking it to where the incoming is going to come is coming from, right? Something like that. So whatever incoming is coming in, whatever inflow is coming in, or monies are coming in, is definitely going to be related to how it's going to be spent. So, but remember, Adrian's view for expenses could be a whole lot of things. Here, I've just tried to show the different projects, and he could then begin to have his, depending on the budgeting model, he could then be showing this in terms of in an activity-based budgeting format, and where he's talking about he's talking about direct and indirect, direct and indirect expenses, And then he could break it down further to some more elements that make for maybe the advertising part or the online part, where you begin to see things like, it could get as sophisticated as possible, and then you see such companies trying to drill deeper into how they could actually take abstract activities and things that they do perform towards the event that actually translate into real value. So you could have, so many things could go in here. I can't even delve into. I can't even begin to delve into it, because once I start, we might just lose focus. But then Kirsty here, on the other hand, notice how she has more lines than Mila, but that's because her events are, similar. She only decide, maybe she definitely needs refreshment, decoration, lighting, and fitting. She could then have programs, and then she could have things like publicity needed to be done, maybe advertisement, whatever it is, printing graphics, prizes could be won at such an event. You just never know. But what Kirsty will be having here, all her lines are totally dependent on the nature of the event that she's planning and doing. And so, notice how I did say earlier regarding scenario 2, which is Adrian, probably having much more views and analysis and assessments going on with his budgeting process, especially for his expenses or even his revenue. That's why I've shown this view that Adrian and Kirsty could likely be, doing based on the nature of whatever business they're involved with. Someone like Adrian could have a revenue model and could have projections for spending and how he wants to get his revenue, among other things. As you can see on the screen, you can see yearly budgets and or projections based on how he expects things to turn out. So again, just to reiterate here that Adrian and Kirsty could have quite a lot of things going on in that sector. So it's pretty hard to put something one-sided, because even here is where it gets even more. You need to drill deeper and get more complicated to just say, this is how it is. So that you do not take this and think, oh yeah, this is how I could apply it, because it wouldn't work for any organization just that way. You literally have to take each organization on a case by case basis. And so, in summary of those scenarios, you could tell that Mila is quite informal, and Adrian is definitely very formal. And then the fact that you need skills you need abilities to multitask, and of course that the nature of his business is on a larger scale, and with he had multiple projects running concurrently, so it's just something to take note of. And the fact that scenario 3, which is Kirsty, it could be formal, it could be semi-formal. So it could be semi-formal in a scenario where it's a family-owned business. So there's a tendency for things to be done so Kirsty, almost how Mila runs. If she decides to run some certain aspect of her event in a Mila style, sometimes it does look that way. Again, remember, we sometimes have to mix models and use things here and there just so that it suits the nature of circumstance we're having to review or have a look at. And so that takes me to the our next point, which is how to then read it. And I would like to say here that the first thing to always do is to actually get into the right frame of mind. And that's what I always try to do first. Because when you're dealing with numbers, you literally need a clear head. It's maths going on from here on. But it's not. So it can range from elementary math, arithmetic, to sophisticated A-level engineering maths. It can range, anything could go on in here when it comes to budgeting. So here's where, maths really pays. Excuse me. So, but then once you get into the right frame of mind, then while you're trying to make sense of the information, it's also one thing to look out for is where should I be paying attention to, or where do I want to focus on, or where am I heading to? So if you don't even know where what is at, you might be confused about how to make sense of what. Okay, so if things are not even, so what I mean by that is perhaps, when you have a balance sheet, you know what to look out for in there because you know what it's used for. So there's no how you would want to be talking about preparing a budget without basically also understanding the financial statements, the basic understanding of it, how it is reported. Same thing with a profit and loss statement. Same thing with the cash flow statement and what they're used for. And same thing with all the reports that could come out. So there's always that need to actually, before you can make sense, know where you're delving into. I'm going to go into the P&L to see what my expenses are. So remember, budgeting could range is going to be for the entire entire structure of the business. And so you budget for the balance sheet lines, you budget for the profit and loss lines, you budget for the cash flow lines. And those are the major three statements. So you literally have to budget for all those. So even though we spoke on the screen about income expense or expenditure, you definitely have other budget considerations to have a look at, which would also come as an offshoot from those two, from the P&L, from the income and expenditure, then flows to the balance sheet, and more sensitivity analysis, among others, will be then conducted to check the validity of the budget. And so it's also good to point here that one key financial skill to have is, because once you've prepared the budget, you literally have to then, on a continual basis, sort of monitor all of your lines. And that's because you're trying to make sure that you're not going above what you have budgeted. The aim is to spend less than to keep the spending in check so that it's not going above the income. That's the aim, because you're in business, or whatever you're doing to make profit. So except your Mila, who is not for profit, right? Any other person is thinking to make profit. And so it's going to be reasonable to not go above your spending, even in your day-to-day life. And so again, just to put some clarity to this, I just included this screen because it just keeps coming up. So most people tend not to understand the difference between fixed and variable costs. And so I wanted to see it as how you'd see the needs and wants scenario, pretty much. So the fixed costs elements in a budget are the spendings that you must do. You must pay your workers. You must pay for the rent if you're renting a building, except you own it. You must pay for insurance. So those are things that are basic that you literally have to, they're fixed in nature, they're recurring, they come year on year. You have to budget for them. So sometimes costs are differentiated in that way. And then the variable ones, I wanted to see that once, meaning they could change. And so the examples on the screen, when you're talking about labor costs, is more manufacturing related type of variable costs. But nonetheless, they're expenses that do change and not kind of fixed in nature. Why is it important to monitor these things? Again, I said the purpose is just to make sure that you are not going above your spending and you're within limit. So to manage effectively, again, it's all about being effective and efficient, right? At the end of the day. So monitoring is because I want to keep in check and be effective and efficient in my spending and minimize costs, right? And then also you could, once things go out of place, or maybe some one-off exceptions to happen, you can then investigate and see where the problematic area is, and then you can actually rectify. I've created scenarios which we're going to go into ahead, but it also shows us trying to rectify perhaps an event that affected. So using events in this situation, an incident that affected an event, and how that an incident that affected a budget and how we had to work things around. So, but then again, it helps with even for approvals, perhaps if you have hierarchy and managers and different levels of management approving things and all the other. So looking at the budget kind of helps the person take a better decision. Why am I approving this? This is what we have to spend, and we are not. So it also helps you efficiently manage and authorize your expenditure within the organization. So that's something to take on. So let's review a typical or a sample budgeted income and expenditure. Well, we're going to consider these using scenarios that I've given. So I'm going to have to switch the screen again for so that the content can be properly viewed. Okay, so here's a scenario where you have Buildings Limited, who has just completed their budgeted income and expenditure. Notice how their income has been spread per quarter. So you have sales quarter one, quarter two, quarter three, and quarter four. What this simply says is, so perhaps they have sales representatives, people that sell their products, and they make, so from the people that buy from the customers or clients that buy into that product, then that becomes an incoming for Buildings Limited. And so that's what they have projected, or that's what they have budgeted for their incoming, their monies that would come in from the sales of whatever product or service they do render, or they do offer. And they've broken this quarterly and shown on the side. And so they also have expenditure. Notice the fact that this is for a full year. So this is how much you intend to spend for the full year. But then remember, their incoming has been spread into quarters. Just to keep that in mind, it's important. And then that takes us to the scenarios that we have tried to use to assess things. So here's a scenario where we're told that Sandra has been tasked with looking at the company's budget for the year, and the directors are considering giving staff a 20% pay increase. What implications would that have on the budget for the year? So we're going to see what that effect will have on what we have already budgeted earlier. So here's scenario one. I'm going to have to zoom back in. Notice where what part that affects on the entire picture of things. So I want you to focus on the first column, which is the scenario one. And notice that even though I haven't put any changes to the sales quarters one, two, three, and four for the first scenario, because I will explain later why I haven't, but be rest assured that that place will be affected for every adjustment that takes place in the expenditure part, which is everything that goes on here, ultimately affects what goes on up. And so you would see the effect of that 20% pay rise shown on the line, salaries and wages. And it was 45,000 before. And then we applied a 1.2 multiplier, and that gave us 54,000. Now, for some people that might be confused and thinking, payroll expenses, shouldn't that be where it would be? Here's how you clarify that. I have to clarify that payroll expenses are different from salaries and wages in that payroll expenses are related to the entire payroll system. So the payroll system is a very, sophisticated system that is put together and technology driven most of the time. And so the entire value chain of that process itself is cost intensive, among other resource intensive structure. So things also that could be as payroll expenses could be things like your remittances. So things like your national insurance remittances, either from the employer for the employees or from the employers for the employers. So there are some remittances that need to be done on behalf of the establishment. And so those sort of things, among other costs that are involved with the payroll system, that go into here. So it's totally different from the employees you have and their earnings as employees. So that's why it's in salaries and wages, which that's what that means. And so notice how the effect of that goes onto the total expenditure. This used to be 87,000 approximately before, but now it's grown by 9,000 thereabout, and now you wound up with 96,540. And see what that effect is on the total profit expected for that scenario for the year. And notice how much it was before, 19,000 before. And so just to have an appreciation of the effect of each event and each incident taking place and how it affects the overall budget adjustments. And so back to scenario two, just to have a view of that. Sales in quarter three have dropped to a third of the predicted total value to manufacturing of a predicted total due to manufacturing fault that they had to spend, and they also had to spend a quadruple of their budget on repairs. So what this is saying is sales dropped in quarter three, in the third quarter, by to a third, right? And manufacturing maintenance, because that's some manufacturing fault. So we know that's got to do with something that's gone bad in some equipment or some machinery. And so that's why we would look into the expenditure part, and we'll be focusing on maintenance and repairs for that aspect. Notice how we said we read in that scenario that it quadrupled, means 4 times. So it was 1,000 before, now it became 4,000. And notice the third quarter sales, which was 27,000 before, but it's dropped to a third of that amount. And see the effect on the total income overall, and notice the effect of that 4,000 on the total expenditure. Now, they could have been getting 19,000 in terms of profitability, but because of that adjustment, it's gone to 7,000. Keep in mind that we do not take a decision based on this only. Once we see something like this that has gone off a bit, we then begin to do more analysis and see how we can improve things. And if we do something to the expenditure, we're definitely going to do something to the sales income part, the income part, because they are linked to each other. And the third scenario, where we have Building Limited has the option to replace the machinery, which will increase the sales income by 40% per year, but they will then have to buy machinery, which will cost, or an equipment, which will cost 100,000 to replace. And so how does that then affect the projections of the budget better still? And so we have the 40% increase, which is from the 107,000 to 149,000. Now, how this is apportioned is another, or the model of apportionment and or the style of spreading this, or how to go about whatever goes on here, is more than just So again, I had to explain earlier that it's on a scenario by scenario basis. So much more goes on into how you go ahead with the spreading. It depends on more things to consider. But I've tried to spread it using an apportionment, because I know that from the scenario overall, it says there's a 40% increase in sales. So I know that no matter what, all these increases must total this amount. And so that's why I've had to apportion them based on this growth increase. Explaining how to apportion that is a whole lot of conversation. It's nothing too serious, but it's something that I have to put aside to explain again. And so for the expenditure side, you see the effect of the 100,000 on the 300 for the furniture and equipment, and see how that affects the overall bottom line. The total expenditure is grown considerably, almost over double from what it was before, which was 87,000. Now see that effect on the overall profitability or loss, because now it's going to be looking like a loss. So at this stage, we could have been making a profit, but we're making a loss. So because of this equipment purchase, there's a tendency to want to say, you know what, no, this can happen, and get, panicky or freaked out here. But here's where we then put more synopses and things in place to then say, okay, you know what, the long-term benefit of this might, in the long run, we might have our sales grow exponentially at the end of the day. So as a result of this machinery. And so it might just be worth it in the long run. And so we might choose to absorb this deficit for now, but then futuristic plans or projections then take effect of these, what we are likely to have in terms of sales, and then you can have an exponential growth applied in there. So that's some of the considerations we put in there. So we won't take a decision just based on what we see right here, but we'll do some more where you then have things like maybe, some more deeper probing to see how we can improve things. And then after this, we'll then have to, we could then start to give recommendations. So a sample recommendation could look something like this, where we'd say scenario one, maybe we should increase sales budget for each quarter by 30% due to salary increase. Or keep sales in quarter three as 27,000 was stretched with a reasonable projection of growth of 5% before the incident. Or assess loss effects, and possibly proceed or consider other options, or conduct other analysis and scenarios or efficiency goals, or more things to be done in there. So again, remember scenario one, because we had taken some, because the expenditure line have been affected in total. Right? I did mention that they're linked to each other, so there's no how you wouldn't want to take account of that effect in the income side. And so that's why a recommendation could be that increase sales budget for each quarter by 30% due to salary increase, because of course you have to be able to justify the pay rise. Yeah, the employees are motivated; they want to do more, and so you'd challenge them more with stretch targets in that scenario to be able to account for that increase, and so on, and also for the second scenario where you have the stretch and reasonable projection growth of 5% before the incidents. So you could keep sales, you could. Here, a lot of things could go on, and this is where the brain work goes in terms of how to assess things and what more you can then use to get the best result or scene or analysis to put forward. And so I'm going to switch back to the next one. And so once we're through with such analysis and such budget breakdowns, among other assessments and analysis, as you call it, then we begin to have things that look like this, and then we begin to try to put them in the pictures to make it digestible for the readers, or we're trying to put it forward for executives or to take decisions on, and for business owners to then have a look at what these projections do translate into, and then you begin to see trends, and then we do more analysis, and then that's where you have a variance analysis, among others, that do come up along the line from here on. And so that kind of wraps it up and brings me to the end of this webinar. And it's just one thing to let you go with is that we're definitely with you on this journey, and we actually do hear you. We understand the frustrations and limitations that may have arisen, and complexity of understanding the processes and what to do. But then just rest assured that help is there and available for you to help guide you as best as possible. And so here I would say are the next steps to look out for more details from Claire, among others. And then I'm happy to take any questions from here on, but thank you for listening.